Hush.
Well, ladies and gentlemen, we've got a new. I've got a new guest co-host, if you will. His name is Jimmy the rodent, or
No, Max.
oh, Max. Sorry, Max the. I keep wanting to say hedgehog. Max the guinea pig. Max, say hi, Max.
Hi.
Pick him up a little higher. Let the people see.
Actually, pick him up.
No, his name should be Riff Raff. Riff Raff the guinea pig. What do you guys think? Riff Raff. Remember that little cartoon, Heathcliff? Heathcliff, Heathcliff, no one should terrorize his neighborhood. Riff Raff, no one should leave him drowning in a cage in your neighborhood. All right, on to the real stuff. But lady in Plant City, if you want Riff Raff the guinea pig, let us know. My wife said she replied to your message that, you know, if you want him or her, he or she, whatever it is, you can have him. Otherwise, we're probably going to put a little Craigslist ad up as soon as possible. And my wife will be vetting everybody that calls. You know how to handle one of these. You understand what their needs are. Okay. Because the story is that Riff Raff's friend gave them to Riff Raff. You want? Yeah, I'll take it. They couldn't handle it within the first day, and now we have the damn thing. So my dad calls me, man, did you see that article over Wolf Street? The Albertsons one, the supermarket? Yeah, I did see that. Oh, you got to do a video on that one. That just shows you what they're trying to do these days, just to make it by, you got to do a video on that. Oh, okay. I think I shall. So Wolf Richter has this article, Albertsons, supermarket, reveals supermarket meltdown as global deep discounters promise price war in stagnating U.S. market. So there's a race to the bottom, that is, as far as prices are concerned. Aldi's $5 billion bet at a brutal time. Today, Albertsons explained in an amended S-4 filing for a debt exchange offering just how tough things have gotten for traditional supermarket chains. As is so often the case, there is a private equity angle to it. Albertsons was acquired in a 2005 LBO by a group of PE firms led by Cerberus. In January 2015, it acquired Safeway to eliminate some competition. It then wanted to sell its shares to the public. But in October 2015, as brick and mortar retail, that whole nonsense started the meltdown, it scrapped its IPO altogether. The filing's most revealing data are same-store sales on a quarterly basis through quarter 4 2016, comparing year-over-year sales growth at stores that have been open in the current and prior year. I added the red line to show the trend since quarter 3 2015, which you may want to take a little peek at that. It's a small chart, but in case you want a visual, here's a nice little red line. I repeat, not looking good. So, Albertsons, same-store sales growth year over year, not looking good. The S4 supplied some reasons for the decline. Our identical store sales decrease in fiscal 2016 was driven by a decrease of 1.9% in customer traffic, partially offset by an increase of 1.5% in average ticket size. During fiscal 2016, our identical store sales were negatively impacted by food price deflation in certain categories, including meat, eggs, and dairy, together with pressure to maintain competitive pricing in response. The two key factors boil down to competition, precisely what the Safeway acquisition was supposed to have eliminated, a 1.9% decline in customer traffic, and pressure to maintain competitive pricing in response. So in other words, starting in quarter 1 2016, competition pushed previously strong same-store sales growth off the cliff. Given a series of acquisitions by Albertsons over the years, total sales rose. The following are sales for the 12-month periods. Through February 2015, $27.2 billion. Through February, that was 2015, through February 2016, $58.7 billion, which includes Safeway. And through 2017, $59.7 billion, which also includes 29 Hagen stores and 76 A&P stores. At the end of 2013, the company had 1,075 stores. It then acquired, divested, opened, and closed numerous stores. By the end of 2015, it had 2,271 stores. And by the end of 2016, it had 2,324 stores. So, more and more. So in 2016, the net store count increased by 2.3%, but revenues inched up only 1.7%. Hence the decline in same-store sales. During those 3 12-month periods, respectively, the company had losses before income taxes of $1.38 billion, $541 million, and I think they put a B and meant a million, and $463.6 billion. I think that was million. There's no way he meant billion. And it had total debt of a breathtaking $12.3 billion as of just recently, February 25th, 2017. Up, by the way, from $3.7 billion. Oh, we've expanded, we bought some stores, but $12.3 billion, up from $3.7 billion in 2013. Woo! There needs to be some serious book cooking on their deal. Ooh. But which was before the acquisition of Safeway and the other chains. It's not going to get better anytime soon. On Sunday, Aldi announced it would invest $3.4 billion to expand its base in the U.S. to 2,500 stores by 2022. The year 2022. The privately held discount grocery chain, headquartered in Germany, already has 1,600 stores in the U.S. It also owns Trader Joe's, which has an additional 464 grocery stores. In February, Aldi announced that it would add 400 stores by the end of 2018 and spend $1.6 billion to remodel and expand 1,300 of its stores by 2020. This would bring its newly announced investment in the U.S. to $5 billion. The expansion will make Aldi the third largest grocery chain operator in the U.S. behind Walmart and Kroger, the company said, and it's going to compete on price. They said, as we continue to expand and grow, our purchasing power continues to increase and allows us to bring products at better prices for consumers. Another German grocery store chain, deep discounter Lidl, with 10,000 stores in 27 European countries, has plans to open as many as 600 stores in the U.S., it revealed just in May, just a little while ago. Its first store will open on June 15th. It expects to have 100 stores on the East Coast a year from now. It said it would undercut competitors by up to 50%. This threat by arch competitor Lidl stimulated Aldi's thinking. CEO Jason Hart said in a statement that Aldi's prices would also be about 50% below those of traditional grocery stores. Aldi has always focused on in-house brands to obtain the deepest price cuts. The company's shares aren't publicly traded, and quarterly earnings reports don't cause any kind of ruckus. Kroger, the largest supermarket chain in the U.S., booked a sales increase of 5% in 2016, but its net income fell 4.5%. And its shares, after a series of earnings disappointments, are now down over 25% from the end of 2015, even as the rest of the stock market was booming. Then there's Walmart stores, the second largest grocery seller in the U.S. It's experimenting with lower prices in 11 states and is hounding its vendors to undercut their competitors by 15%. According to analysts cited by Reuters, it's willing to spend $6 billion on these efforts. So listen, all of our vendors for Walmart, we need you to take one for the team. We're looking for a 15% decrease in pricing from you guys pretty much across the board. What do you say to that? I don't know if they have much to say to that. Guys, did you not hear Lidl's coming to town? Not Santa Claus is coming to town. Lidl's coming to town. And they said right off the bat, we're going to undercut normal prices to 50% to be real competitive. So am I thinking right where I can see, retail apocalypse, the auto loan apocalypse, and now we're going to soon, in the near future, I guess, have the supermarket/grocery store chain apocalypse while they fight each other to the death on lowering prices? just to win that's darn us darn consumers' business. They need it badly. Again, Kroger had a sales increase of 5%, but its net income fell 4.5%. And its shares got destroyed, down over 25% since 2015, the end of 2015. One of my favorite stores to pound on when I get the chance, thanks to their transgender nonsense that lost them a few $1 billion, which I'm glad to say we participated in for a little while, of not shopping there for a bit. Target, too, has been plowing more aggressively into the grocery market. Online grocery sales are taking sales away from brick and mortar locations. Amazon is now more than just dabbling in it. Everybody wants into this $630 billion per year market. I don't, and my subscribers don't. We want in on the the cryptocurrency market. That's where we want in. Alas, over the past 6 years, sales at grocery stores are up a total of 14%, not adjusted for inflation, according to the Retail Trade Report by the Commerce Department. Over the same period, the Consumer Price Index for food rose 14%, according to the Bureau of Labor Statistics. So in inflation-adjusted terms, over the past 6 years, real sales have been pretty much flat. The price war. So now sales are flat. We've come to that conclusion. And you have to adjust for inflation. You always do. So sales are absolutely flat. And now we're about to have a big giant, battle, World War III of the grocery chain supermarket stores trying to cut, each other's prices, or trying to cut each other's throat via lower prices. Which is good for who? It's good for you and me. Until a whole bunch of them go bust. It's kind of like that old story you might have heard of. When Walmart was coming in and closing down all the mom and pop shops because nobody could compete with the big giant. And then Walmart said, well, that store's not that productive, and that store's not that productive, and that one's not, so we're going to close those down. And then the people were left. I remember doing a video on this a few years ago. And the people in one particular town, there was nothing around for like super long distance. There used to be, it was the mom and pop, but mom and pop can't compete with Walmart. So when Walmart came to town, mom and pop store was shut down. It was done. And then Walmart realized, y'all country folks, small town, not enough business here. We're going to go ahead and shut down and leave. Leaving nothing there. And the people were complaining. They're writing their Congress member. What the hell happened? Well, that's what happens when a giant comes in and steps on your little ant mound. And then says, I don't like it here. I'm going to go ahead and leave now. Shares of Whole Foods market. Well, hold on. It said the price war will be a godsend for consumers, at least for a while. But what gives? Shares of Whole Foods market have fallen 42% since late 2013 as it grapples with the new environment. And there have been 18 bankruptcies among U.S. grocery stores chains since 2014, according to Reuters, including Marsh Supermarkets and Central Grocers in May, and Fairway Group Holdings, parent of the iconic New York chain Fairway Market, a year ago. This is the environment that over-indebted Albertsons and in its private equity backers had not planned on finding themselves in. Beyond PE firm Cerberus, the backers include real estate investors Claff Realty and Lubert Alder, REIT Kimco Realty, and shopping center owner Scotchenstein Stores. To unload the company in an IPO on the unsuspecting public and convincing institutional investors managing the unsuspecting public's money, the backers must have a buoyant and blind stock market because for equity investors, this must be one of the most toxic combinations. A brick-and-mortar supermarket chain in the age of online sales that was bought by a PE firm, loaded up with debt as it became a supermarket roll-up in a stagnant market that is attracting the biggest deep discounters from around the world to compete with. Wow. So, as I always say, wonder how that one's going to end. That particular company and all of the buying it did is done. They're going to be liquidating those stores, and they'll probably be liquidating them to their competition, Walmart in Lidl and whatever. They're going to be liquidating. Guys, we tried. We bought. We got debt. Now we got to file for Chapter 11. That's how that's going to go. They're not going to go right for Chapter 7. No, they're going to go for Chapter 11, restructuring, wipe off all the debt, whatever. But is it going to be enough to save them when their competitors may be sticking around with 50% cheaper prices on a lot of stuff? Again, good for you and me. Let the big giants have a war together. Well, just make sure you big giants don't kill each other off, because then we have nothing. And then we all point the finger. What about all the mom and pop shops that used to be around here? We didn't shop there. Remember, guys, when Walmart came in, what did we do? We went to where the cheaper. You're always going to go where it's cheaper. You're always going to go where it's cheaper. That's what the average American does. You remember the high oil prices in 2008? $146 a barrel, $4.50, $4.25 at the gas pump. All the truckers were boycotting and protesting, and all of a sudden these little biodiesel things came up, and we'll provide you. We'll take biodiesel. Your trucks will run on biodiesel. We'll give it to you at $3.25 a gallon. We'll give it to you at $3.25 a gallon instead of $4 or $3.50, whatever it was. I remember reading some of these articles. I even did some videos on it. Actually, no, didn't do videos because I wasn't doing videos in 2008. But they were doing this in I think it was right around the middle of 2008 when it was high, towards the end of the year too. That was part of my Facebook days when I was Facebooking people and no one's paying attention. But I do remember discussing it, I guess is the point. And sure enough, okay, we're going to do this, we got this. And then all of a sudden, the club knocked the price down to $50 a barrel, just like Lindsay said, and 40 and 50, bringing diesel and all gas prices back down. And then these newly created biodiesel companies went bust. Guys, we were here to help you. We tried to help. Well, I know, but I can't pay $3.25 a gallon when I can get it for $2.75. Yeah, but we saved you guys. You guys were complaining. I know, but again, I got to go where it's cheapest. Got to be competitive. Well, we can't make the biodiesel and be profitable at that price. Sorry. See how that works? When you're a big giant, when you're like the elite, you can come in, stomp everybody out, crush all the businesses. Give the sheeple good prices for a little while. Things don't go well, you leave, or something else happens and you're gone, and nothing but devastation is left behind. All the stores have been shut down long ago, and now everyone's saying, what the hell do we do? And if the people decide, well, let's start building some businesses up, I'll create a little grocery store and this and that, and then the giant comes back, the people are going to screw you over again, go back to the giant, because the giant's got cheaper prices than you. And then your businesses are crushed again. Competition, right? That's competition. But anyways, on to the next video.